First liquidity, confirmation, drawing liquidity, boom. First liquidity, confirmation, entry, target, boom. Now, this is called the liquidity sweep strategy. In this video, I'm going to show you how you are going to use it to catch sweet entry in this forthcoming week. And this strategy is only made up of only three stages. Yes, three stages. And the three stages are the timing, the section, and the entry. If you can be able to get the timing and also get the section and also get the entry, then you combine them together, you are going to have an A+ setup that's going to make you a lot of money this particular week. Let's dive in. Now, into this timing, we have three types of sections. We have, first of all, the 2 a.m. range, the 6 a.m. sweep, and the 10 a.m. expansion. Now, listen, we have so many and other range, sweep, and expansion, but this three is highly recommended. You understand? Any setup being formed during this particular time is always an A+ setup. The 2 a.m. candlestick in our 4-hour is used by the range, is used for the range. The 6 a.m. is used basically for the sweep, and the 10 a.m. is used for the expansion. In our section, we have the 2 a.m. Eastern section, 6 a.m. London section, 10 a.m. mid-London section. I've talked to you guys about section in our previous video. We have the Eastern section, London section, India section, Tokyo section, and Sydney section. But we are focusing on the Eastern section range, London section sweep, and the mid-London section expansion. So the third one is our entry model, which is the 15-minute sweep is our entry model. Again, the 15 minutes model 1 entry, and again, the model 1 must be confirmed. Then our target should be in the nearest 4-hour draw in liquidity. Everything is what I'm going to teach you in this particular video. Guys, let's dive in. Now, guys, this is a particular sell example on Euro USD. This is our 2 a.m. candlestick as I listed in this particular place, our 2 a.m. candlestick, and this is our 6 a.m. candlestick. Now, all you need to do is to mark out the high and the low of this particular candlestick. If price sweep below, we are doing what? We are buying. But if price sweep above, we are selling. And as you can see, price swept above. This is it here. Price swept above, which means we are doing what? Buying. We are doing what? We are selling. So we are selling because we have a sweep above. And remember, this 2 a.m. is also in our Asian section. It's being found in our Asian section, while this 6 a.m. is being found in our London section. Now you go down to your 15-minute time frame. In our 15-minute time frame, you can see it here that this was the candlestick that causes the sweep. This candlestick was the candlestick that swept the high of this particular Asian range. This is the candlestick sweep here, you can see. And what is our model 1? Our model 1 is that after that candlestick that sweep, this particular candlestick that sweep the high, we are going to mark the low of it. That should be our entry. Okay, price need to reverse and tap us in the low. And again, this particular candlestick must close below it. After this close below it, we're going to expect price to retrace and tap us in here before doing what? Dropping to the downside. This is our model 1 confirmation entry. Do you understand? So now, where are we targeting? Guys, we are targeting the next draw in liquidity. I think our next draw in liquidity should be here. We're targeting here as our draw in liquidity. Yeah. And yes, so our entry should be exactly in this particular position. Your stop loss can be above this particular sweep or in the middle of this particular candlestick model 1 candlestick range. Anywhere you want to put your stop loss, you put it. While your TP should be down in this particular Asian range, this particular draw in liquidity. This is a 1:6 risk to reward ratio. What a very clean and sweet risk to reward ratio. 1:6. If you can catch this like 3 to 4 times in a week, you are profitable. You are profitable. After this, all you need to do is wait for price to retest and tap you in. You can see how price dished out clean and also gave us more profit but by tapping into the 50% of this particular big range. You can see it, price tapped into that 50%. You can also say a TPD here. This is up to 1:9 risk to reward ratio. As easy as ABCD. You don't need to do anything. Just mark out your high and low of the 2 a.m. candlestick. Wait for the sweep above, then you sell, or US of the sweep below, then you buy. As easy as that. Let me give you guys another buy example. Now, this is a clear buy example. Now, if you can watch closely, this is the high of the 2 a.m. candlestick. Yes, and this is the low of that particular 2 a.m. candlestick. Now, price swept above. But do price give us our more than one entry? No, because this is the low. And price already gave us this particular wood range, which is what? Which is a no-no for me. This wood range is a trap for me. If you look at the first example, you can see how clean the setup is, but this is just a bit confusing. You understand? So without falling into this trap, this is an invalid entry. So the buy side liquidity cleared is an invalid. Now we're now waiting for price to do what? To show us its remove by clearing what? The sell side. Now where is the sell side that we're expecting price to clear? The sell side is here. We're expecting price to sweep here. If price can be able to sweep here below here, give us our more than one entry, then we are doing what? We are buying. Now this is our sweep, okay? Guys, this is our sweep and this is our entry. This is the sweep and this is our more than one. As I taught you guys, our more than one here, bam. And price already retraces into this our more than one entry. We are entering from there, putting our stop loss, either it's below here or in the middle. Anywhere you want to pay your stop loss, just pay your stop loss. And your entry, your target should be the nearest draw in liquidity, which is over here. This is a 1:3 risk to reward ratio. And what next? Yes, you leave price to do what you want to do. You leave it, neither it's being stop loss or to take profits. And boom, guys, you can see we already hit TP on this particular trade. So if you can be able to replicate this in your trading strategy or in your trading system, trust me, you are going to see the bigger side of it. You are going to see the bigger part or the bigger profit of it. Okay, guys, I don't know if I can give you guys one more example and then we are done for this particular video. Okay, now guys, this is a new example on Euro USD. We are expecting, this is our 2 a.m. candlestick. We are going to mark the high of this 2 a.m. candlestick and again the low of the 2 a.m. candlestick. And if price sweep below, we are buying. If price sweep above, we are doing what? We are selling. We'll go down to our 15-minute time frame. Let's see what we have in a 15-minute time frame. If there's any entry or if there's any call for our more than one entry. Let's watch. We have a successful sweep to the downside. This is a successful sweep. Price swept here. Now this is our more than one entry. We are waiting for price to move up and clean out this particular this particular place that we marked. If price should go above and close this above here, we'll be waiting for a retracement, then we'll be buying. This is as simple as ABCD. For price to move above here like this, close above, tap us in here, and we are buying. As you can see, price already closed above it and we are entering from here. This entry is now confirmed. Now waiting for a retracement. Our stop loss should be here and our TP should be in the dearest draw in liquidity, which should be above here. This is our nearest draw in liquidity. That is where we're expecting price to take us into, and we are going to catch this 1:3 risk to reward ratio as clean as ABCD. You can see its price dished out swiftly. So replicate this in your trading strategy, and guys, see you at where? At the top. Don't forget risk management. The risk management here is a 1:3 risk to reward ratio management. Know where to place your stop loss, know where to place your take profits. Your take profit target should be in the nearest draw in liquidity, while your stop loss should be neither below that particular candle that causes the sweep or in the middle of it. That is just it. And your target at least 1:3, 1:4, 1:5, depending on your target, depending on your draw in liquidity size. You understand? As easy as ABCD. See you guys in the next video.